to the Fredrikson and Byron. Thanks for coming out kind of bright early this morning on a Wednesday for this presentation. Where we're going to be talking about how to avoid employee malfeasance and embezzlement. I'm Lucine Huffy. I'm a shareholder in our White Collar and Regulatory Defense Group. Part of what our group does involves representing companies that have fallen victim to embezzlement schemes, doing internal investigations for them and so forth. But we also sometimes actually represent embezzlers who have been actually turned in and accused of crimes and are facing charges on it. I'll be moderating the discussion this morning. But please feel free at any time during this discussion to ask some questions. Make comments based on your experience. We want this, it's a large group, but we still want to try to make it interactive as possible, both among the panel and with you folks in the audience. So instead of reading to you from a bunch of bios, I'm just going to actually let all of the panelists, one by one, introduce themselves and just give a couple of sentences about their experience and maybe with the issue or what they do in general.
Hey, Ryan, could you just check your mic, too? I want to make sure that everybody can hear.
Check one. Ryan Anderson. I'm at Hayes Companies in Minneapolis, an insurance brokerage operation. I am the national practice leader for the executive risk lines of coverage. One of those things being in that world, crime coverage, commercial crime, fidelity bonds, and everything in between. Prior to that, I was an underwriter at Travelers for 7 years and underwrote these lines of coverage. So I've got to see it from kind of both sides of the insurance marketplace.
Can everybody hear if I don't use the mic? Is that all right? My name is Bill Brody. I'm a lawyer in the Trust and Estates Group at Fredrikson and Byron. My practice is representing affluent families, private companies associated with them, family offices associated with them, private foundations associated with them. And, so I see victims. And I want to talk a little bit about that this morning.
Morning, everybody. My name is Chris Jeffrey. I'm a partner at Baker Tilly, and I lead our risk and internal audit and cybersecurity practice here in the Midwest. I spend all my time on internal audit, internal controls, IT audit, cybersecurity, and things like that. So we're really kind of on the front side and helping both public companies and private companies prevent fraud.
Good morning. Rick Oster. I'm a partner in a firm called Waypoint. We're a group of mainly ex-federal law enforcement that specialize in white-collar investigations and due diligence. My background is 26 years with the FBI doing mainly white-collar crime.
Hopefully not doing white-collar crime, Rick. I mean, I know the FBI is a little controversial these days, but so my name is Joe Dixon. I was a federal prosecutor for about 10 years, and so I prosecuted a variety of frauds, including employee malfeasance, embezzlements of all sorts, lawyer embezzlements from firms, large and small. So I've seen from the prosecutorial side this issue. I also worked at United Health Group as their deputy general counsel for internal investigations for a few years. And so I recognize that it's not just the small companies, but it's the big companies. It's everybody that deals with this problem of employee malfeasance. And frankly, the attendance today is heartening on the one hand and perhaps not heartening on another. It's obviously an issue that has a lot of resonance. And so to the extent that, anyone has thoughts or comments, I mean, we can share our experiences. We've had a fair bit of experience on this, but to the extent that you have your own observations, questions, or experiences that you want to share, we really want to encourage a dialogue here. We're all in the family mode, and I think we are recording. I should note that. So this will be posted for other potential interested parties who are dealing with these kind of issues. So thanks very much for being here this morning.
Thanks, all. Some folks in management probably think that having a trusted employee actually stealing money from the company is an occurrence that is akin to being struck by lightning statistically. But I don't know, is that really true? Bill, we're going to start with you. Why are we all here? Is this rare? Is this something we really need to be concerned about?
Well, I maybe that it's either not rare or I'm that rare person who is struck by lightning twice. In the last 8 or 10 years, 2 of my clients have suffered embezzlements in the $5 to $6 million range each. One was a family office. The other was a private operating company. In both cases, very trusted employees. I've also seen some smaller embezzlements, from household-type employees over that period of time. And it got my attention. I'm thinking, I'm one lawyer in one law firm in a second-tier city, a nice second-tier city, but a second-tier city, and I've seen 2 big ones in a relatively short period of time. Fortunately, in each of those cases, the perpetrator was apprehended. One, I think, is serving about an 8-year term up in Duluth, and the other one is serving a 4 to 5-year term, I think, in Florida now, right, Joe?
That's right.
But one of the things I've learned from Joe Dixon and have observed in practice is if this occurs, it's very unlikely the money will be recovered. So in one case, 0 recovered. In the other case, at best, 40% probably, Joe, something like that? And, it has the attention of the law firm that we've tried to think about, why are we seeing this? And it started conversations between Joe and I that ultimately led to this seminar. And I've tried to think about why. And one of the explanations is, well, we're Midwesterners and we trust people. We expect the best of people, and we really don't think people are going to take advantage of circumstances. Well, And I function in life that way, but I think there's probably a naivete with that, right? I mean, a lot of embezzlements do occur. The Tom Petters of the world do occur. Simply because we're in the Midwest, we're not protected. A second thought I've had is, well, maybe the culture of Minnesota is changing a little bit with the pervasiveness of gambling and those addictions. Maybe it's symbolic of a breakdown of morality. Greed is good. A lot of those messages are communicated. But I think I've seen something else. I think a sense of entitlement evolves in a lot of family circumstances where there's a family office or there's a private company, trusted employees. The line between friend and employee blurs. And I think if somebody does not have a really strong moral code, they're saying, well, wait a minute. Why does this person get to fly around on private jets and enjoy this life? And I don't. I'm working harder than they are. And so there becomes an element of self-help that develops. And I think in both of the circumstances that have involved my clients, that phenomena existed. And in some of the less significant thefts or embezzlements that I've seen, that phenomena existed. And, so as a result, I end up counseling clients, you better maintain that line better than you do. But all that said, I think the explanation is this in the end. I joke that I've practiced law for a long time, and I've decided there's only one rule that can explain everything, and that is unlimited capacity in human beings to rationalize their behavior, and that's what's going on. And so the rest of this talk really is about how do you protect against it? How do you have controls in place that still allow the family office, the business to function in a reasonable way? How can you hedge against the risks? And if you suspect that you've got the problem, what do you do about it? And I'm anxious to hear what these other gentlemen have to say.
Thanks, Bill. I read a study last year. It was conducted by an international insurance firm that found some interesting statistics. It said that 80% of victimized businesses in their study had fewer than 100 employees, which bears out to some of the things you were saying. The median age of perpetrators is 50 years old. And women represent more than 60% of embezzlers. And a high percentage of embezzlers suffer from addictions like gambling or other addictions. Joe, as a former prosecutor, does that bear out at all in sort of, what you've seen?
Yeah, well, on the one hand, yes, it does, and on the other hand, I want to caution taking too much comfort in our ability to identify who is a likely candidate, because I prosecuted, as a fraud prosecutor, I prosecuted largely men, but if they were embezzlers, they tended to be women, and they tended to have a gambling addiction. That was sort of broadly true. The other characteristic that I found as a prosecutor was that, there are some people out there who just feel entitled or want to steal or lie to get money. There are other folks who somehow get themselves in a hole and a problem through maybe no fault of their own, and then are desperate to try to dig themselves out, and then will do some things that they otherwise wouldn't do, sometimes criminal, to dig themselves out. So there's a couple of different categories of how people get into this problem. But let me just also note that while perhaps this small office, this small company is less likely to have some controls that we're going to talk about today, I have seen employee malfeasance at the largest of companies. I won't name any names, but there is no company, there is no type of organization, there is nobody who is protected or impervious. And when you say to yourself, I trust everybody I work with, so has everybody else who has ever found themselves in this position. And so that is just not a good control or protection for your organization. And so what we want to talk about, in part, this is a client service to how can understand that if you're an organization that deals with money, you have this as a risk. And so how do you deal with this risk? Hopefully on the front end, that's what those folks down there are for. But if you have to deal it on the back end, then that's where Rick and I can be of help.
So let's move on then. I think I'm going to direct the next question here to Chris, our accountant, and ask, what are some of the most common schemes, or shall we say, what is the low-hanging fruit in this as far as missing accounting controls and ways that employees can exploit their employers in this way?
Sure. So I always think that, or what I always kind of tell my clients is the easiest way for somebody to defraud an organization is really to get that organization to disperse money to that person or cut that person a check. And you kind of think to yourself, well, gee, we probably have controls in place to prevent that. But what I thought I'd do is really kind of focus on two cycles, and just give you some thoughts on internal controls and on processes that you can kind of reflect on and think about with your own organizations. But the first that I wanted to focus on is payroll. And so the two things that you're really concerned about when it comes to payroll would be either a ghost employee or a fake employee, or some kind of an inappropriate payment to a current employee through either a pay rate increase that hadn't been authorized or approved, or some kind of a bonus payment or something like that. So I think the biggest or the most important control within the payroll process is segregation of duties. And I think what a lot of organizations don't really look at or may fail to do is to really segregate those HR duties from the payroll duties. So in other words, have you segregated the duties from actually sort of processing payroll and cutting the payroll checks from actually the things like updating the HR master file with pay information or bonus information or things like that. So I just think that's a relatively easy kind of first step that you can take around the payroll process is to segregate those two duties. And that doesn't necessarily mean that you need to add headcount. It just means that you may need to maybe add a duty to somebody else to kind of look at some of those things first. Another thing to make sure to kind of look at within payroll is really to make sure that all payroll transactions are approved. So after they've been entered into the payroll master file, is somebody going back through the payroll master file and kind of looking to say, okay, were all these say these bonus payments or pay rate increases, anything like that, were those things approved and were they accurate? So you generally speaking, especially in a smaller organization, I think you know what your employees make and what you bonus them or what any bonuses or things like that were. So take a look at the master file. So if you're using ADP or Paychex or somebody like that, or even processing your own payroll, you can usually go back in and look at the payroll master file and look at changes and things like that and make sure that those things are approved. The other thing that I think is important to do, and this is probably something that would apply to a larger organization, but if you have terminated employees, were those employees removed from the payroll register? So it would be a common fraud scheme would be if there were a group or a group of people that were terminated from a company. Somebody may not remove that employee from the payroll master file and change the bank account information to have it flow into their own bank account. So that is a relatively common fraud scheme. So again, it's just ensuring that those terminated employees are removed. And the other thing that I really like to see organizations do is, again, take a look at any payroll change log. So again, ADP or Paychex or likely any other payroll provider, they normally have some kind of a change log that would outline the different changes that were made within the payroll master file. So I think it's a good practice for somebody to take a look at those changes and make sure that those things were approved. So that's payroll, and again, I think the most important thing within payroll is just to make sure that you've got those duties segregated. And one of the sort of common themes that you might have been thinking about when I was sort of going through those remarks is gee, that doesn't really sound all that complicated. But the reality of it is that most frauds that we see just it's not a extremely sophisticated scheme that gets perpetrated. It tends to be something pretty simple. Somebody tries it the first time, it works, and then they just kind of continue on. So I think you'll kind of see that theme in around the disbursements comments that I'm going to make here in a moment as well. So I'm going to move on to disbursements, and this is probably the area where we see the biggest opportunity for fraud, and as a result of that, the biggest opportunity to put some controls in place. So I'm not sure. Is anybody familiar with the Dixon, Illinois story? There might be a few people in here that are. So a very interesting story. And I'll just give you the high level on it. So Dixon, Illinois is a relatively rural city, I think north central Illinois, in the 20 to 25,000 person population range. They had a comptroller there by the name of Rita Crundwell, who happened to be, she had worked for the city for 20 or 25 years. And as it turns out, she was one of the premier quarter horse breeders in the country and had all these, very highly regarded and award-winning quarter horses. A huge house, $1 million motor home, houses all over the place, very expensive cars and all that kind of stuff. Meanwhile, she's the city comptroller making about $80,000 a year. So nobody really asked, well, gee, how can you afford a multi-million-dollar home and all these horses and things like that on an $80,000 a year salary? And everybody just assumed she had received an inheritance, or her quarter horses were doing so well that she was making all this money. Well, as it turns out, over the course of 22 years, she had defrauded the city of Dixon, Illinois, for $54 million. Which is the largest municipal fraud that's been perpetrated in the history of this country.
Largest known perpetrated fraud.
Right. So, and what she had been doing over the course of these 22 years is she was basically taking she was taking in receipts that the company or that the city was getting, and she was just simply depositing those receipts into her own personal bank account. So I mean, it's basic. It didn't take a genius to perpetrate that fraud at all. It's just that there were no segregation of duties in place at all. So she had all the control. She received the check. She entered, or she took care of the general ledger. she reconciled all the bank accounts. So there was just no control at all. So she just simply took those checks and deposited those in her bank account. And over the course of, like I say, 22 years, she had defrauded the company of $54 million. So I just think that goes to show that these frauds can be very long-lasting, and if there aren't controls in place, the perpetrator is likely going to just continue.
So, hey, Chris, can I just jump in there and talk a little bit about segregation of duties? Because it sounds simple and obvious, and I think it's much harder in practice in some ways from just sort of a human being level, because what segregation of duties actually means is we have to involve more than one human being, which operationally slows down a process, creates inconvenience, creates extra work and extra layers, or at least the perception by whiny employees like me, and so people then try to, do we really have to? Why do we need to do this? Why can't somebody, Johnny, pick up my check? Or why can't I just, here, sign this? And then for sometimes perfectly, oftentimes really valid sort of, I just need to get this done quickly, get around these segregation of duty concepts. And it's not always clear to me that organizations necessarily understand, other than their like CFO and their controllers actually understand why they're doing this and why it's important, and that they actually need to enforce the segregation of duties, sort of have a disciplined, consistent approach, because when that lapses, that's when you are opening yourself up. And I don't know if you could comment on that.
No, question?
Dulcie has a question.
Oh, I was just going to say, I'm working on I was recently working on an embezzlement investigation when the controller actually used the segregation of duties as a way to gain control. So she had clerks under her and did not let them enter payroll, and said, I have to control this because we have to have this segregation of duties. And then she was using that as a way to manipulate the payroll system and get money for herself. So, and then just to Joe's comment, it can be very, I think, complicated for companies to execute that in a way that actually is effective. And, how do you address that situation when you have somebody who's, I guess, using the segregation of duties as a way to gain control for themselves?
Yeah, no, that's a great question. And what I would wonder is so if this person was, stating that he or she needed this particular access so they could segregate the duties appropriately. I mean, I just wonder what was happening in the rest of the process and whether or not those duties were really segregated, because I would think that they probably weren't if this person was able to get through or was able to defraud the company. So I would wonder, did somebody else, say, review whatever transactions were occurring or reconcile the accounts or what have
Right.
you?
It was so she was in charge of the account reconciliation and the entry, but she had a payroll clerk who was doing the front end.
Sure.
And so she was calling that segregation, and that's just not enough. It has to be somebody else who's doing the reconciliation. I think that's the point.
Yeah, and that's exactly the point. And so what I was going to just say is that, I mean, if you kind of think about cash transactions or I mean, really any transaction in the company, I always kind of break it down by custody, authorization, and recording. And no one person should have control or should be performing duties within more than one of those kind of work streams. So what I mean by custody, it would be who custody of the cash. So say receiving any cash that might come in from the company, or in the case of disbursements, say mailing checks or initiating wire transfers. So that would be sort of an example of a custody duty. Authorization would be either a check signer, an approver of a wire, that type of transaction, and then recording would obviously be recording the transaction or reconciling the accounts. So it should be somebody different that is performing those duties.
Yeah, and so I think Dulcie's example, and then I'm aware of one where a superior within the organization is using the people he or she manages to circumvent the segregation by sort of instructing them what to do when they really don't know what that authorization is about. They don't validate that authorization. They're just doing it because my boss told me to. And so that's where the organizational discipline has to come in terms of training employees, training supervisors, training their subordinates that no, you need to be responsible for this particular function without just relying on somebody else saying it's okay to do when, if that is the role that you're playing in terms of being authorized or being, what I'll call the treasurer function. Those are different functions, and you need to have personal responsibility and line of sight into what you're doing.
Yeah.
Go ahead. One comment is, also to your case scenario, sometimes we see this quite often, that bully, I'm in charge of this, I'm doing this. Stiff arm, stay away from my roles. That's a red flag. That generally when we get involved, it's bad things and money's been out the door. But we look for those red flags when we're doing our investigation. Employees have mentioned this person putting their arms around the entire operation. I told my boss, or I told somebody else, that employee's a good employee, been here a long time, we trust them. Pay attention to those red flags when they pop up earlier. Take a look at that. If it's something that is, you believe, a little more significant, get some professional in there. Talk to your accountants, but don't let those red flags go by. Big problem when you do that.
We've talked a lot about payroll and a little bit about disbursements as well. Are there any other, Chris or anyone else on the panel, any other types of schemes or sort of, commonly missing controls that lead to these issues?
Well, I want to make sure that we tie out on the disbursements piece, but a lot of what I've worked on for organizations beyond just sort of the disbursement frauds, which are probably the most common problem that organizations have. They're the most simple to execute, and they can go on for quite some time. Are kickback schemes or vendor relationship problems that can take a variety of different forms and are extremely challenging to identify and to investigate. And so I'll just that's a broad concept, but and we'll talk a little bit about how we've looked at it from the back end, but the vendor relationships are a source of problems. And so understanding and having visibility into your employees' contacts with third-party vendors, understanding who the vendors are, understanding whether there's any relationships between your employees and the vendors is critical on a variety of different levels for a variety of different reasons. And the brother-in-law or the neighbor all of a sudden is a vendor where there's channeling, lots of money to this vendor. Well, what's the relationship with your employee? Is that really the best vendor? Is there some sort of improper relationship going on? And if you have a process around the selection of vendors, I think that's one of the controls you can put in place to protect yourself on that side. But it is a challenge, and it is something that we deal with some regularity.
When you have an employee that goes bad, that's significant enough for any organization to lose a lot of money.
Can you use the microphone?
When you have an employee in an organization that wants to commit, whether he wants to embezzle money, is going to create fictitious vendors, has a payroll scheme, issue him or herself large bonuses, there's many ways to do it. But when you combine an outsider that's colluding with that insider, that's a significant issue that you can lose a lot of money in a short period of time. So the vendors, watching your vendor list, or watching your vendors being added to your vendor list, the first thing we do when we get involved, we want to see your vendor list. We always look for the vendor list, and a lot of times we'll find that employee sometimes alters a company name a little bit, but maybe used his or her home address. We look for simple things on that vendor list. It's something you can do every day in your business. Watch your vendor list. How are new vendors added? Who vetted your vendors? Do they have a website? Does it look legitimate? I'm a big advocate of doing backgrounds on your vendors. I'm advocate of doing backgrounds on your employees, to be honest, especially in positions of trust. Past performance predicts future behavior. You'll be surprised what you find in their background generally. It doesn't protect you against that good employee that goes bad. And that happens a lot because of pressure, gambling, lifestyle. I'll stop.
But it is true that when we find a problem and we do the background check, it's not uncommon to find that there has been a prior problem, and the employer inevitably says, "Oh, if I had only known," and then the question is, well, did you ask? Did you do this? And at that point, the milk is spilled, so we don't spend a lot of time on it. But there is this sort of recognition that I could have done something to prevent that, and in part, that's what today is all about.
And part of the reason we do that background is where are assets that person has invested in or potentially that the company can recover? Or do we see liens? Do we see IRS tax liens? Do we see other liens that there's no money there? Gambling issues. You have to make some decisions quickly in these things.
Chris, I know you were talking the other day about some phishing schemes.
Yeah, so I thought I would just kind of touch on
Question,
Yeah, Joan.
before moving off the kickback schemes, just wondering if you had any other comments about investigation approaches when, after receiving anonymous allegations that there's a kickback scheme between an employee and a vendor or vendors. What are the steps to go about that?
I promise we'll get to that. I want to make sure that we cover the controls piece and then ensure but we're planning on talking about how to deal with red flags, because it's a great question and it's not an easy answer.
Yeah, Chris, we had some interesting conversations when we were getting ready for this panel about, things that occur, cyber attacks that don't necessarily occur because of employees themselves, but maybe through employees. And why don't you say a few words about that before we move on?
So I just think, given in the current day and age that we're in, I think we'd be a little bit remiss not to talk about a little bit of cybersecurity here. So I'm sure that many of you in your organizations have seen this, but the phishing attacks have been definitely on the rise. And so what I'm talking about there is say the controller or a CFO, somebody gets an email that looks like it's, say, from the CEO that says, we've got this vendor and we need to pay him right now and wire him, $150,000. And so I'm guessing that many of you have seen that in your organizations, and it's what it is it's a spoofed email from a hacker that's effectively trying to get you to pay them the $150,000 or whatever the sum of money might be, and they're making it look like it's from somebody within your company. So we have had this happen, unfortunately, to some clients, and basically, once that money is released, it's gone, and there's no way to recover it. So watch out for that. And what most of my clients are telling their employees now is to say, look, the CEO or the CFO or really nobody is going to email you and ask you to wire any sum of money to anybody. They're going to walk over and talk to you or pick up the phone and call you about it. So it's a pretty easy control to put in place, and I just suggest that everybody kind of follow a similar path. And the story that I love about this particular case is we had a client in which the CFO received an email like that and went to the AP clerk and said, gee, this email is from the CFO. We've got to, we've got to wire this $150,000 to this company right away. And this AP clerk said, no, we can't do that. We're not following the controls. We need to have two signatures on this particular this wire is large enough that we need to have two signatures on it. It needs to be your signature and the CEO's signature. And if the CEO is not here, we can't get the signature. We can't wire the money. The CFO pushed back on this clerk, but she said, nope, can't do it. It doesn't follow the controls. And sure enough, it was a phishing scheme, and she saved the company, $150,000. And so I think it goes back exactly to Rick. I think you had made the statement to say, you've got to have employees who are willing to follow the controls, and if you do, you can prevent things like that.
So I would add, I was involved with a client who had a not so happy. They actually got a similar email. It was from the president to the CFO. The CFO took it at face value, sent off the money. Because they were fairly quick acting and a quick call to the FBI actually did permit the FBI to recover some piece of it. But I mean, this is a very short window. And Chris, you're exactly right that usually when the money's gone, it's overseas and there's no getting it back. But the FBI does have some tools if it's very, very quick to gain something back. So I want to just note that.
I'll kind of add from the. Oh, go ahead. Sorry.
It depends, but we're talking like hours or maybe a day or two, maybe, depending on what country you're dealing with, what bank system you're dealing with, and how the transfer occurred. And so I don't have a bright line for you, but if we're talking like a week, that's too late. If you're talking hours to days, calling the FBI is not a bad idea. And if you don't succeed, you're nothing lost in that.
So, Joe, the family office control, as distinct from a business, is family member sends an email saying, I need you to send X dollars to XYZ art gallery. At a minimum, the family office ought to have a rule that there's oral confirmation on the phone from the family member before the money's wired, right?
Good example of a control to be put in place. That the email in general is just not, even if you think it's from your company, given hacking and apparently that occurs sometimes now, that is just not a trusted source of information always.
The problem with a lot of the frauds is that pressure. We need to get it done now. We need to get it done yesterday, because the business transaction's going to go away, or we need, for whatever reason, the fraudsters love that sense of panic. We need to get this done now. We need a decision. The world's not going to end if it's done tomorrow. Call that CFO, call the president. Oral communication with the decision maker is so important. I hate to say this, I'm getting to the point where I can't trust emails, what people send me. I don't know how many times I'm getting emails for a demand. See attached invoice that you haven't paid. Now, I might do that every now and then, forget to pay somebody, but I'm not clicking on that thing. I'm hitting that delete and forget about it. There are so many scams. Email discipline, text discipline these days now. We're moving into that realm. It's so important to slow down and verify.
And Rick, kind of the new mantra within the hacking world is that only rookies hack machines, but the real pros hack people.
Social media hacks, yeah.
It sounds simple, but what these guys are talking about is the fastest growing trend in any claim insurance market for crime that we've seen in forever, probably. Employee dishonesty, employee embezzlement's always been around. It kind of ebbs and flows with the economy up until it's kind of bucked the trend the last couple of years where it's on the rise despite the economy, for the most part doing well. These are getting a lot more sophisticated. People think that it's not going to happen to them because, I can identify that email. It looks like it's coming from Hayes companies. The lowercase I is actually a lowercase l, that kind of stuff. That's getting a lot more sophisticated this day and age. I had a client of ours, local, metropolitan company that had a social engineering. It's also called cyber deception. Had a claim recently where they also call them false president's claims because somebody was doing an acquisition. It's confidential. You can't talk to anybody about this. I need funds wired immediately. But they got so sophisticated, they're in there, they're monitoring the calendars. They know when that CEO or CFO are out of town. They know and they're monitoring email conversations, so they know how people speak. We've been attempted at Hayes companies a few times as well, where Jim Hayes, the founder of our company, sends an email to our CFO. Hi, Steve, could you please, you do this? Us knowing Jim, know that he would, never say please. He would never do that kind of stuff. So it's like, okay, I can catch that. This is a little too fishy for me. But these were monitoring for months the lives that they had. And it happened to be the person who was in charge of the wire room had a sick child. And they were asking, hey, how's little Johnny doing? How's this? How's that? And there was no question in her mind that this was the people that she works with on a day-to-day basis. But to your point, callback procedures, absolutely. If you don't think that there's slowly becoming an insurance solution to this, it's dipping its toe in the water and it's growing because of demand. But carriers are wanting to know, insurance carriers are going to know, do you conduct callback procedures? And if you don't, they're going to force that into your policy saying you must have followed a callback procedure for there to be coverage. Well, if you did do that, 99.9% of these cases would have been caught. Simple pick up the phone. Hey, was that you? Yep, okay. I have had cases where they've actually hijacked Comcast lines as well. So when they did call back who they thought was the person, they actually called back the crooks. So it was multifaceted. But yeah, I mean, I could talk to you. I mean, there's cases you can read about here locally, upwards of $56 million. The vast majority of them are in the hundreds of thousands of dollars. But it is an interesting dynamic as far as insurance goes. It's the one of the more dynamic things that we can talk about. And everyone's interested because at least an attempt. Someone has tried this against you guys. So.
Ryan, as long as you're talking about the insurance issue, we're going to move now to lead the discussion more towards how companies can identify malfeasance and protect themselves from malfeasance. And since you were talking about insurance anyway, I think that is obviously one way that companies can manage risk with respect to this issue. And can you talk a little bit more about, sort of what what products there are and what companies should have in place?
Definitely. To start, I think everything that these gentlemen were talking about before, from internal control, red flag stuff, please try to implement those. It's good risk management for one. It's on the front line. But you better believe your underwriters, to get this coverage, are going to be asking those exact same questions. Do you do this? Do you do this? And if you don't, have two people reconciling bank statements, if you don't have proper segregation of duties, if you are not, now it's kind of going by the wayside, but it used to be the biggest thing was, do you require 1 or 2 weeks of consolidated vacation time of your employees? That kind of stems more from the financial world, but the theory was if they were removed from the office, they couldn't cover their tracks, and eventually they would be caught. So if you required that. So all of these things are good. They're going to be asking questions. The good thing is, from an investment standpoint, it's the broadest coverage you can possibly have underneath the crime form. There is a couple keys to structuring that. There are commercial crime forms for commercial entities. There's financial institution bonds, which are the exact same thing. They just call them bonds if you're a financial institution. But the trigger what underwriters rate off of, what they are concerned about, is the employee controls. The base rating factor is the number of employees you have to come up with a rate to charge you from a premium standpoint. But the broadest coverage available is what's called employee dishonesty underneath that form. You just have to craft this in the right way. A couple different pitfalls you potentially have. One, broaden out the definition of employee to as broad as you can possibly get it. There's going to include pretty much anybody who you typically think of as an employee will already be included, but you want to broaden this thing out to independent contractors if you can, leased employees, temporary employees, attorneys retained on your behalf.
Don't point at me.
I was just leaning. I wasn't pointing. Just leaning.
Thank you.
You're leaning away, Bill. What does that mean?
But you want it, because the more people you can get classified as an employee underneath your policy, again, now they are subject to the broadest coverage. If they do anything dishonest that causes you guys to sustain a first-party financial loss, it's going to be covered underneath this policy. The one thing I will say, just a quick thing, because I know we're diving between cyber and crime pretty fluidly. Crime policies are theft of funds and property. Think of that, not theft of data. Theft of data is going to be covered by a standalone cyber liability product. That social engineering aspect that we were talking about does blur that line, so I'll get into that in a second. But the other thing that you got to be concerned about with an employee dishonesty claim and how a policy is there to respond is something called a double trigger that's built into a policy. So it says, one, you have to, this perpetrator had to, one, get a financial benefit from this loss themselves. And they would have to cause the insured, or you guys, to sustain a loss. Sounds simple enough, but it's simply a change from and to or. Because a lot of times, they're colluding with third parties. They may not personally have gotten a financial benefit, but they did intend to cause you guys a loss, or vice versa. So changing that around is a huge benefit. We see a lot of claims getting excluded simply because, or denied, based on that double versus single trigger. So that would be the employee theft. Again, it's available, it's affordable. We are seeing losses tick up. The premium levels that our insurance carriers are charging these days are not sustainable. But because I mentioned that I'm kind of in that executive risk space, the underwriters kind of mirror the lines of coverage that I broker. They're also pooling this with directors and officers liability, employment practices liability, fiduciary, and a big gamut of other coverages. So as long as those are profitable, they can kind of have a smoothing factor with their crime. Eventually, this may change as rates and claims continue to rise. Insurance companies might start getting a little bit harder in terms of their rates. Underwriting is becoming a little bit tighter. They do want to know about these vendor controls. I do want to touch on quickly the social engineering aspect or the phishing schemes, cyber deception, everything that you can throw at it.
But before
Yeah,
we
sure.
leave that, so you had mentioned that the pricing is on a per employee basis. So bigger the organization, the bigger the premium. It seems a little bit backwards, but it's out. I understand why they would do it. But is there a ballpark number per million or something like that per employee? Or a range that you would put on that?
It's all over the board. I would say if you are a company with a commercial company, again, industry class is highly dependent. Financial strength of your company. Sorry, I didn't get into that as well. People talked about the ebbs and flows of the economy, the rise and fall of claims activity. They also, it doesn't seem indicative of this, but they also underwrite the financial strength of your organization when it comes to crime. Because on a sinking ship, employees may try to find a little bit of piece of their own before this ship goes totally down. So they are underwriting that. On the healthy company, commercial, not in a financial institution, not doing anything too crazy. 100 employees for $1 million of coverage, you're looking at about $1,500, maybe $2,000. So it's not a large spend. I think it's definitely worthwhile. But again, too, we have large companies that buy massive towers of these programs that are $50, $100, $150 million tall. The vast majority of crime claims, if you benchmark your peers, if you are anything under 1,000 employees, $1-2 million is going to benchmark you totally fine. That's not to exceed. That's not to say that the losses will not exceed that. It's just that would be a prudent purchase based on what your peers are doing. Doesn't mean they're buying it correctly, but it's a good due diligence.
Thanks, Ryan.
Question right here from the audience, sir.
Oh, was there? Did I miss
Talk
it?
about buying cybersecurity insurance separate from employee dishonesty.
Sure. The common thread here between the two coverages that we're talking about today is that social engineering aspect because it's data versus funds. We are seeing a big wave. Yeah, we see it around April, March. When the CEO saying, "I'm making an acquisition, please wire me funds." Hey, listen, HR person, I want to take a look at all the W-2s of all of our employees, and for whatever reason they PDF them and send them off. And so that wouldn't be covered under the crime policy. That would be more under the cyber. The cyber product obviously goes a lot broader than just that from a crime standpoint. The epsilon of what everyone thinks about cyber is that the Target breach, the Home Depot breach, name them, frontline news everywhere. It's that first party cost of notification. Target had to pay $18 million in postage for their cyber breach. I mean, that's insane. They had a $100 million tower that was gone within the first couple months. But it's the first party. Really what you buy in a standalone product is that breach coach. All these big companies that are providing us AIGs domestically, the Beasleys, the Chubbs, they have the breach coach that is instantly there. Because typically a claim on a crime is crime as well as cyber is, I think something's going on. We need to dig into this. We need to look to see what's the problem. Same thing. Something's funky in our systems. IT may contact somebody. Something's funky here, so they dive in. Breach coach is right there. They get the forensic accountants in there. They get the public relations in there. All these costs that you guys are going to be incurring into not only plugging that hole, fixing that hole, identifying what was lost, what was breached, and then appropriately managing the attorneys generals across the states if you have multiple states and jurisdictions that your customers or data has been housed in. All these notification things, they help you through that process, so it's really what you're buying calls.
Thanks, Ryan. That's helpful. Yeah.
Can I just
No.
Just
Follow up.
follow
Gotcha.
up, which might lead into the next thing, which is, can someone talk a little bit about data retention and keeping social security numbers and other privacy information, and what period of time we should keep it? Because we're binding cybersecurity insurance, and the consultants are telling us, the insurance agents are telling us, you shouldn't keep this information as long as you are, because you can't bind your insurance because they view that as too high a risk. Well, that runs contrary to a lot of other policies that you hear in governing a company. So it's getting a little confusing. Like, are we at bigger risk if we're keeping employee files and social security numbers, tax ID numbers, and all this information?
It's a little outside maybe the panel, but Ryan, do you have a comment or anything? Do you have any sense of that?
I don't have a sense of that myself. Obviously, the anything from a records count standpoint, a lot of people will try to benchmark you or try to price you based on revenue, but your true exposures is the number of records that you have underlying. So, yes, the farther back you go, the more records you retain, the higher your risk because of, just the sheer number and volume that could potentially be exposed. But I don't have a sense for the amount required for retention or how long you have to retain that for, where that fine line is between your business and then the insurance marketplace. But I can definitely dig into that for you if you'd like.
Anne?
Voice of the employment lawyer back here, that's a very good point. There are a series of laws that require you to keep employee files, payroll information, benefits information for some extended period of time. So be very careful about starting to destroy that information for other reasons. I understand this, the cybersecurity risk, but you would be in violation potentially of a number of different regulatory schemes. So check with your employment counsel, your tax counsel, benefits counsel before starting to say we're only going to keep stuff for 6 months or a year.
Good comment.
One comment, if encryption of data, if you have to keep it, not a bad idea. If you are breached, encryption is going to help you a lot.
So I do want to move us on as we're getting
We have our
closer
next
to the time.
client
So-
seminar.
yeah, exactly. Right. But I want to make sure we have a couple of important topics to cover on embezzlement. I want to make sure we get to those. So what about, so some of the red flags, let's talk about identifying when this is happening. Obviously, one way of preventing loss is to identify it early on before it goes on for dozens of years and to the tune of millions of dollars. So I think, Chris, I know you have some comments about that, but everyone on the panel should feel free to jump in and talk about identifying red flags of malfeasance.
Sure. So, so we as a group kind of brainstormed a little bit about, what some of the red flags might be that might be indicative of some kind of a fraud occurring. And I'll just kind of drain a list here and certainly invite any of the other panel members to jump in here. But one of the things that we tend to see is a lot of journal entries. So a lot of I'll just say excessive journal entries, more than what you might expect. And the other thing with journal entries might be journal entries that would be underneath or say just underneath what your threshold for review might be. So we see a lot of companies that have, say, a threshold that would be like $5,000 of journal entry needing a secondary review. If you're seeing a lot of journal entries that are, $4,999, that might be something that you'd look into. We talked a little bit about vendors, and Rick talked a little bit about looking at your vendor master file, which I wholeheartedly agree with that, and I think that's something easy that everybody can generally do is take a look at your vendor master file. But I'd say excessive vendors is certainly a red flag, and kind of in conjunction with that might be if you've got vendors that have the same or similar names but, say, different addresses. So if you've got, a vendor that's, say, Baker Tilly Virchow Krause LLP, but then you've got another vendor that's Baker Tilly, Virchow Krause Inc. or something like that, that could be indicative of an inappropriate vendor. Another thing with the vendor master file would be vendors that have an address of a P.O. box. Because it's generally easy for anybody to get a P.O. box and set that up in their own name and cause you to sort of send checks and send payments to that P.O. box. So I'd look at vendors with P.O. boxes or vendors that have the same address as any employees. So the pretty basic technology exists. In fact, you can do it with Excel even to kind of compare your vendor master file with your employee file and kind of look to see if there's any vendors that have the same address as potentially an employee. So that's another red flag. I'd say, too, on the reconciliation front if you're finding that you either can't reconcile accounts, or you're finding that that there is a reconciling item that just doesn't clear out over a period of time, that also could be indicative of some kind of fraud occurring, because that means that either your subledgers just can't match up with your general ledger, and there's something within that reconciling item that may not be appropriate. So what I'd suggest is if you find that you can't reconcile accounts, and there are reconciling items, make sure you understand what those are and find a way to reconcile them.
What about employee behavior? I know you talked earlier about people who putting their arms around, an area and kind of creating a fence for other people to stay out of. Is there any other types of, can you look at your employees, and is there anything you can use there that's a red flag?
Well, the obvious one is looking at employee behavior, and I think I'd mentioned earlier with the Dixon, Illinois case, is if you're finding that your employees are living a lifestyle that that they just can't afford, that is something to look into, and it happens all the time. And I think people just generally sort of tend to turn a blind eye to it, or we talked a little bit earlier about rationalizing why an employee might be they might be making $50,000 a year, but they're driving a Ferrari. So why is that? Or they're going on all these expensive vacations and things like that. So I just think it's important to take a look at what your employee, at the type of lifestyle that they're leading, and kind of asking yourself, can they really afford these different things that they're doing?
So let me just talk a little bit about sort of missed red flags in the cases that I've seen. There's a couple of different kinds of missed red flags. One is that, and this sort of goes back to sort of our original, why does this happen in the first place, which is there's sort of this underlying assumption, I know the people I work with, I assume there's a reasonable explanation, and therefore I'm not going to even look at it. And because, when you have a red flag or a question or an allegation, frankly, we're all busy, we all have a lot to do, and it's easier to deal with these things if we just sort of say, well, I assume there's a reasonable explanation as to why, somebody didn't follow the procedures, or why they're outside the norms in some way. And so just assuming something is okay and there's a reasonable explanation is one way that organizations regularly miss the red flags that they have of a problem before it occurs. The second thing that I will hear regularly is, Joe, we have this allegation, but it comes from somebody who's a disgruntled employee and they're really a bad performer. And therefore, we think that this is nonsense because they're not a credible reporter. And my job has always been, well, I understand that they're not a credible person, but is what they're saying true? Because I might agree that they're not a credible person, but that doesn't mean that what they're saying is not true. And if I don't actually take what they're saying at face value and look at it to determine whether it's true or not true, what's the evidence show, then I'm not doing my job in terms of evaluating an allegation, because I worked in a profession, being a prosecutor, where people who weren't credible regularly provide testimony and evidence that was actually true. So I think taking allegations, taking red flags at face value, and just asking, being curious, could this be true? What does the evidence show? What do I need to do to follow up? And that's a little hard, because what you're breeding in your organization is suspicion and skepticism. And so you got to be sort of mindful of not overdoing that and playing the federal prosecutor. But you have to take red flags and allegations at face value, because otherwise you'll be looking back in hindsight and saying, hey, we missed the boat 6 months ago, a year ago, 3 years ago. And then finally, and we touched on this, is just sort of a lack of transparency. There's this closet that everybody knows about, that the door is closed on, nobody knows what's going on in there, and I'm just going to ignore it and pretend it's not there. And, in any business organization, there should be some level of transparency, and if people can't talk about what they're doing, can't talk about their transaction, can't provide a good explanation, that usually isn't good, and there's usually a reason why that's the case, and it's usually not a good reason. Now, I can imagine proprietary issues and trade secret issues and HR reasons why there are compartmentalized aspects of it, but these are sort of things that organizations need to sort of do a better job of training their people to ask the right questions, and not in a confrontational way, not in a way that undermines the employee relationships, and this is tricky, but one that protects the organization against the possibility that bad things do occur.
Quite often.
I think, wait 1 second, I think we had a question in the back from Karen.
It's actually a comment, another employment lawyer here. In terms of another red flag that gets missed sometimes, I've seen a number of employees do a background check and then say, you know what, I'm not going to disqualify this employee because of the job they're seeking. I think I'll just let them in, and then fail to follow up on that and see how many times that person tries to transfer. Because if it's a good-sized organization, often an employee will take the easy path in, and then once they're in, look for opportunities. And that's sort of the opportunistic employee as opposed to the person who just stumbles upon something and is a little bit more planful. So if you're doing background checks, it's important to know something.
So for those who maybe couldn't hear over here, the comment was that when doing employee background checks, oftentimes sort of the initial entry, they may let someone pass into the organization depending on what their job duties are. But if that isn't, results from that background check aren't taken into account as they move through the company, they can position themselves eventually to be in a position of, committing malfeasance that wasn't initially, thought about when they first did the background check at the start of employment.
Oh, sorry.
Yeah, no, go ahead, Rick.
That's the small percentage of the population I could describe as bad. There's just a small percentage of your employee population that's bad to start with. We're not talking about a good person in your employment who all of a sudden goes through a financial crisis or has that gambling problem come on. You're letting that person in your front door with kind of a known background that you don't want. It's an issue today. We see that over and over again. One comment on Joe's thing is on Joe's red flags and what he's seeing. Quite often we will come in, we'll talk to whoever hires us. This allegation was raised to us about 6 months ago that this employee was potentially stealing or whatever. I asked that employee, and they said no. They sent me a copy of the bank statement or a check in question. So it didn't pan out, and I shut it down. It's easier today than ever before to manipulate bank statements, credit card statements, checks. I'm a big advocate. Go to the source documents. Get the original documents. Your system may say a check was written to Rick Ostrom, but it's actually to the employee or to somebody else that the employee is in cahoots with. Get the source. Get the originals. Don't accept copies. PDFs, that's the way business runs, but if you have a question, call your bank. Talk to your banker. Can you give me the statements? Some businesses, smaller businesses, the CEO or the owner gets the bank statements, credit card statements first. Looks at them, hey, this isn't right, that's right. Source documents, so important, because it's easy to manipulate your internal system.
Well, Rick, as long as you're talking about, red flags and we're starting to move into the next topic territory, why don't you continue talking a little bit about what do you do when you've actually identified some red flags inside your organization?
Joe, why don't you take, Joe, why don't you take that to start with?
So first of all, obviously, it sort of depends on sizing what the problem is, and if it's a molehill, you treat it like a molehill. If it's a mountain, you have to treat it like a mountain, or at least the possibility. And that triage can be very difficult because you're dealing with relatively little information. But the first thing is to determine who is the right person or people to investigate this kind of a problem. And so I'll just take the kickback concept. I worked on a case a while back where the company had an employee who heard from a friend who who was sort of in the industry, but an outsider, a third party, that there was a rumor that one of the employees was taking kickbacks from a vendor. And so the company was in a bit of a conundrum because what do you do with that? And she did exactly the right thing. She sort of reports it, I think, to the general counsel or her boss, and it sort of works itself up the chain. And they don't quite know what to do about it. And so they actually hired Fredrikson and Byron, and I think we actually worked with some investigators. And the first thing we did is, okay, we got to keep it from the allegation from this particular employee and to try to control the group of people that knew about the allegation so that we could look around the problem first, gathering information. Are there vendor relationships? Yes, there are. What do those vendor relationships look like? Well, this person is in control of those vendor relationships and has the ability to manipulate that. So there's at least the opportunity that this is true. Then you try to evaluate sort of the vendor relationships to see if they're in line with market. If they're not in line with market, those would give you some indication as to whether there's at least a question there. But then you start doing some background forensic information, review, usually emails, usually sort of looking at their computers. Hopefully you've got policies in place that permit you to look at your company emails. Most companies do, and your company computers, and that's for guys like me and Rick, that's the bread and butter, is the email traffic. And what you can pull from email traffic is usually extraordinarily helpful from an investigative side.
And especially today, email is so important. But if your employees rely on phones to conduct business, if it's a company phone, the company can access that information, text messages and whatever else is on that phone. If it's a personally owned cell phone that gets reimbursed, the company probably can't get access. What are your policies set for, yep, we can access that. That's our phone. That's our company phone. Most companies don't like to do that. You just send us a bill, we'll reimburse.
So we like to gather the information without sort of, alerting people of a problem, because, that things can happen to evidence when the perpetrators are alerted. And once you've sort of gathered the information, one of the things that early on I like to do is to try to assess whether we're still bleeding money. If this is true, are we bleeding money? What does that look like? Because I can't do anything about the money that's already gone, but I can do something about the money going forward. You have to weigh, with the risk of alerting the people you're looking at, if you stop the flow of money, and you have to weigh how much you care about the money that's going out the door, or maybe you're telling me, it's all historical, there's nothing future, so you can take as much time as you want. That's a trade-off that the company, the organization has to figure out. And then once you've gathered your information, you do start doing interviews. And ultimately, you're going to talk to the employee who's at question and let them know kind of what the allegations are. And you might triangulate into that to understand what they're going to say. It really depends on the kind of thing. But ultimately, proving a kickback from a company's perspective is very hard because you don't have the visibility of the money flows outside of your company. You have visibility of your company's money flows, but a kickback is outside the flow of your company typically. And then what you're going to do is, at least we're going to do, is we would have to give the company a picture of, here's the possibilities and here are some probabilities. And you have to make some employment decisions based on what you're seeing and if there has been any violation of policies. I mean, oftentimes there may be violations of policies that will make it very uncomfortable for the employer to keep them on. But if you want to prove a crime, some companies, and we'll talk a little bit about this, will just go to law enforcement to do a thorough investigation. In terms of the interviews, whether you're having outside counsel or your in-house counsel or even compliance people or somebody else do the investigation, there's a host of employment considerations that get brought to bear. And Karen, Karen Shanfield is in our employment group. You and I have worked together on a variety of different investigations. Thoughts that you have from an employment perspective on conducting these kind of employee interviews.
Karen, if you wouldn't mind standing up, if you're, sorry to put you on the spot, but no one, probably people can hear better.
Here, can you hear me now? Over there?
Yes.
Can you hear? It's like,
Yeah.
it's like an ad, right? So a lot of things that are important with the employee issue, and a little bit depends on what sector you're in. Public sector has got some specific things that you need to think about if you're going to be interviewing employees. Certainly, if you're interviewing employees in a larger organization, particularly, but in most organizations, you're going to want to make sure that the employee, it's called the up-down warning, you want to make sure that the employee understands that you represent the company, not the employee, and to the extent that you suspect that there might be some sort of a conflict of interest between that employee and the company, or between two employees, or potentially criminal liability or individual civil liability, you might want to think about whether that employee needs their own counsel. So these are all things to think about really up front as you structure the investigation and before you get too far into it. One of the problems I see sometimes is folks being anxious, as you said, to jump right in and get started without sort of giving that groundwork some thought. So laying that foundation is important. You have to give some thought to that and figure out exactly who you're going to approach, how, and what rights those employees might have to their own counsel, and the suggestion that happen.
So further question to each of you, but in the course of doing such an investigation, as you said, difficult with a kickback because, sometimes you just can't verify did this happen or not based on the available evidence. What do you think of the appropriateness and or effectiveness of the technique of kind of doing a sting where you have a private investigator perhaps try to solicit the, you're for it? I'm just wondering, is that appropriate and does it work?
Rick, have you done that?
Yes. Depending on the circumstances, do we want to have somebody contact that particular vendor? Order maybe product from that vendor. Try to talk our way. Where are you actually located? A number of times with vendors, we see a nice website and all this fancy frill. There's no address. There's no nothing. So where are these folks? Sometimes we'll do a background on that vendor. We don't see any legitimacy. We don't see any address. We don't see any corporate records. That's a hint itself. But yes, we will make calls. We will do certain things covertly to verify their legitimacy, to order products from them. Will they sell us products? Order products online. Maybe even go, if we find an address, Google Maps are great. Hey, it's a UPS store. Well, that's another indication. If it's an address, we will physically try to go by that address. Watch the address. Do people come and go? Is it a legitimate business? If it's somewhere else in the country or the world, we'll retain resources to do that. It's a favor. It's easier in this country, obviously, but you want to do that overseas as well. If you're getting some pinging of a problem overseas.
So we're going to go back, revert to our days in government now, because now the prosecutor's going to come in and rain on the parade of the FBI guy who wants to do all these fun things. And Rick obviously knows exactly what he's talking about. But from my standpoint, I typically think that a true sort of sting is very hard to execute on. I mean, under certain circumstances, it can be exactly the right thing to do. But part of the thing is what is my goal as the organization? I mean, I'm not putting the person in jail, right? My questions is, do I want to continue to employ this person? Maybe do I want to sue this person? But those are ultimately the questions that the organization has to ask. And gathering information and doing an interview, it is regular that if an employee is doing something wrong, they will not answer these questions, or they will lie about what they're doing. And that will be hopefully enough for an employer to make an appropriate decision about protecting their organization. And you ultimately probably don't need to determine whether or not a true kickback actually occurred. You are going to know enough to know, I need to remove this person from the organization. Now, you might want to go to law enforcement to protect other people, because this person has really engaged in kickbacks and you want to make sure that they are punished for what they did to you and never do it again to anybody else, the only way for you to realistically do it, because the employment lawyers will tell me, Joe, I don't care how much proof you have, you're not going to be able to say, yeah, this guy committed a crime, because that puts the organization at risk. Then you have to go and interface with law enforcement. And that has its own benefits, the benefits of potentially criminally prosecuting people, has the benefit of being very successful at recovering assets. The 40% recovery that Bill talked about earlier was because the federal government could reach out to different states and grab assets that this person had and then turn them back over to the victim. So there's reasons to get them involved, but there's also downsides, which is the federal government then takes over the investigation. Ultimately, if there's a prosecution, it will be a public fact. Organizations don't always like to be known as victims. It makes them look ineffective, it reduces confidence. So there is some risk around that. And the U.S. Attorney's Office, and we had somebody here yesterday talking about this, does everything they can to not victimize a victim organization again by how they handle it in public. But there are some risks here, and that's part of the dialogue that you have about, as an organization, of what you want to do. I had a client, we uncovered a false invoice scheme. Before we could even interview the employee or the former employee, I was getting a call from their attorney who probably looked at my bio and said, this guy would love nothing more than to go and tell the FBI. And all of a sudden there was a confidential settlement where the employee was repaying. So there's a variety of different things that can occur.
And it depends on what the company wants. What's best for the company? Is it we need to exit this employee right away because of X, Y, or Z? Is it significant enough fraud or crime that law enforcement comes in? Like Joe said, they take over the direction of that case. You kind of lose control. They might want to do that deep undercover if they, we're kind of going to cross into a different, if they suspect the employee is stealing intellectual property from you, maybe it's a foreign country that this person is working for, or this person is working for a competitor of yours. So that is a significant step. It's not an embezzlement, but it's intellectual property theft, and so presents a whole different ballgame. Whole series, I won't get into it, but what are the circumstances of what the allegations are, what the company wants to do?
Yeah, just a quick question. Back to the data access. As employees meld more of their personal email with their company phones and everything else, how much access do you actually have to their private email accounts and things? None?
Generally not, and it would be improper for us to access that. That's something that the FBI can do, that we can't do, obviously, as private citizens. But you'd be surprised that if employees use their company computer to access Gmail, to access their private accounts, and if by using their company computer, they are uploading information onto their company computer, and it's on their company computer. Dulcie, I think you.
I've had several clients who've done this. Advisable to put in a system when your employees log into their whatever computer systems they're using, whether it's a company database or their email or whatever, it actually sends a warning notice that says this email can be accessed by the employer at any time. This is our system. That can help protect you down the road if you do need to access that from claims by the employee that's been an improper access.
Karen has a comment too.
The other thing I've seen happen is, employees who think they're so clever and so smart will sometimes turn over their phone to you, even if it's their phone, and say, look, take a look at my text. There's nothing bad here. What they think isn't bad, we might think is bad. So I think we still ask. I mean, the fact that you don't have the right to grab it doesn't mean you don't ask for it.
Well, also,
and again, people sometimes are quite cooperative.
Can you put into a policy or something that you require employees to acknowledge that if they're going to use their personal phone, let's say, for work, that then they consent in return for that to be searched. Is that a valid approach?
Yeah, I think you want to be careful about how you craft the language of that policy, but you have a policy that will cover that.
But then the employee then can always refuse, though. But yeah, you can put it in the policy. I've had many situations where employees have also voluntarily handed over their personal laptops to the HR person or the COO in these investigations and their cell phones.
Look, I mean, I've seen people consent to searches of their car with 10 pounds of cocaine in it. So, desire to say yes when asked a specific question in a particular instance is pretty strong. We're all sort of, trained from kindergarten to comply, but I think when you have policies, prospective policies in place, granting broad access to personal information, that's where I think you have to be quite careful about how far you're going with that.
So, and the other, I'll just say the other good thing about the policy, when you drafted it correctly, is then when the employee refuses to comply, you now have another reason to separate from them.
And that phone, it's my personal cell phone. Yeah, I'll give it here. Go ahead, take a look. There isn't anything. Well, they've probably deleted the bad stuff. So you want to try to get that phone, have a forensic image made right away, so you can gather all that deleted data. Because that's what's going to happen a lot of times is delete, delete, delete. Same thing on laptops, delete, delete, delete. When they catch wind of something up, most of the time that can be captured. At least you can tell there was deletion, so that's another issue. Okay, you deleted. It doesn't have to be critical. You were deleted stuff after you were told not to. That's just another thing to do. But forensic, I'm a big forensic image. Get one made right away. And work off that forensic image versus the actual device.
I mean, we always think that's kind of step one, is if you have some kind of a suspicion of embezzlement, get all the electronic information right away. Don't fire that person necessarily. Just get the laptop, get the phone, get the forensic image right away, because then you've got the best chance of retaining as much data as possible.
And protect your system, your server. Make a backup of your server, take it offline in case it turns ugly.
So, the other thing that we like to look at relatively early is obviously what kind of business this is. I mean, we've sort of been assuming it's a private business with private transactions, but regularly our clients, these organizations are involved with public agencies, with public monies, with grants, all sorts of different interactions, and there may be requirements imposed on them contractually on these organizations to disclose certain misconduct. And so you want to assess pretty early on whether there's a contractual or even a business reason why you're going to have to disclose some of this information relatively early to third parties, non-governmental actors or governmental actors, as part of your business model, and understanding the implications of what you're going to have to tell other people may affect how you think about what we're going to look at, whether we're going to, how tight we're going to lock this down, whether we're going to involve law enforcement. But these are all things you want to think about relatively quickly. You're going to want to see if you've got the insurance policy to make a claim, because what you don't want to do is have bought the insurance and fail to put them on notice that you found something, and you may not fully even understand what that is. Of course, when you call the insurance company, then they start asking 1,000,001 questions, and you may not want to answer them. So you got to balance when you do that and how you do it, and what you tell them, and whether you're waiving privilege by doing any of these things. These are all rather complicated considerations, but this is a complex sort of environment on these particular issues.
Hey, Joe, you already talked a lot about the pros and cons of contacting law enforcement, but what about other external communications or internal communications? Like, how do you handle some media inquiries that may result if you have reported to law enforcement? And then, what about communicating with your own employees and both the witnesses and, general communications in the company about what's going on.
Right. I mean, because obviously, once you've got an idea that something bad has happened, and it's more than an allegation, it's more than a red flag, but something bad has happened, you're going to have, people internally are going to know about it. You're going to have to acknowledge it at some point in a way that doesn't get you in trouble with the employment lawyers and create, liability to the person who done you wrong to begin with because of some sort of defamation claim or anything like that. And so having a thoughtful media strategy internally is important to put in place. And it's also important to put in an external communication strategy if you do need to communicate, or if there's any possibility that you're an organization where the media might pay attention to what you're doing, and having that communication piece in place early before you need to use it is the right thing to do, because when the media questions start coming, when the employee questions start coming, what you don't want is a scramble to vet that communication piece in the last minute, because inevitably you're not going to have a well-crafted statement. It's going to be missing pieces. It's going to overstate or understate. And what you don't want to do is make the problem worse. And you see that with organizations where they'll rush to say something and it won't be right. And then what you've done is you've taken a situation where there's a reduction in confidence in the organization, and you've actually made it worse because of your response.
Are you talking about United Airlines, Joe? I'm just kidding.
I'll just say they did not talk to us before they did.
I guess not.
But so anyway, it's a very problematic area, and it happens all together all too commonly. And hopefully we've provided some thoughts for you to think about, and I'm happy that you all think that you even need to think about this. But you're right to be here. So thank you.
Yeah. Thanks. Are there any? We do have a few minutes. Is there any final questions or comments that anyone has?
One last comment. I can't let you go without talking ethics. You look at the studies of ethics of employees, of students, new generation. It's gone down. The ethical behavior of the new generation is down from what it was in the past. Keep that in mind. Your antennas have to go up and be better at monitoring the employees. Pay attention to your employees. If you see a dramatic change in them, all of a sudden the big spending, all of a sudden they become disgruntled. All of a sudden they're not as effective as they used to be. Just a change from the norm could be an indicator that something else is up. So your employees are your key. Ethics are important. Tone to the top. Ethical leadership's important. So.
Well, thank you all so much for your attendance today. I hope that was helpful and informative for everyone, and have a great rest of your day.